Everything has a cost. And in accounting, a cost object is any item to which a cost can be traced and measured. The proper assignment of cost to the correct item that incurred the expenditure is essential for accurate accounting and understanding the true cost of business. The assignment of these costs falls into two categories: direct and indirect. A direct cost is an expenditure that can be directly tied to a cost object. An indirect cost is a cost of doing business that can't necessarily be tied to just one object, often referred to as overhead. For example, if you run a restaurant, steak is a direct cost of your menu, but your chef's salary is not, since they perform multiple tasks. In manufacturing, cost is determined by the total expense of all resources consumed in the process of making a product. Manufacturing costs are divided into three categories: direct materials cost, direct labor cost, and manufacturing overhead. Direct materials cover the cost of any raw materials needed to manufacture the final product. For example, if you own a company that manufactures specialty boat engines, the cost of propellers and hardware used to make each engine are classified as that design's direct materials. Direct labor is sometimes referred to as touch labor, since it describes any labor cost that can be directly traced to individual units of the product. In your engine manufacturing company, the salaries of the employees who actually assemble your raw materials into finished engines are direct or touch labor costs. Prime costs are the costs of direct materials added to labor costs. The third manufacturing cost category is known as overhead, factory burden, or indirect manufacturing costs. Manufacturing overhead includes the costs of indirect materials and indirect labor outside prime costs. Indirect costs can be easily traced back to a specific product. For example, the night watchman's uniform and salary are important overall costs to keeping your clothing company running, as are your factory's insurance, tax, and depreciation costs. But they can't be directly tied back to that winter coat. Non-manufacturing costs include selling costs and administrative costs, sometimes referred to as order getting and order filling costs. Selling costs are just what they sound like: any costs such as advertising, shipping, sales travel, sales commissions, sales salaries, etc., associated with selling the finished product and delivering it to the customer. Selling costs can actually fall under both direct or indirect costs. For example, costs associated with advertising your company's winter coat is a direct cost of that product, but the cost of the website you sell it on is an indirect cost. Administrative costs cover all costs associated with the general management of an organization as a whole, such as executive compensation, general accounting, legal services, secretarial, public relations, etc. Administrative costs can also be direct or indirect costs. For example, salary of the designer who designed your company's midline engine is a direct cost. But the salary of your chief designer overseeing the entire 6-engine design department is an indirect cost. Assigning costs to cost objects helps to identify where a company like your engine company is spending, how much it earns, and where any money is being lost, leaving the competition in their wake.